Hello and welcome back to our channel where we speak all about futures, technical analysis, psychology, and the importance of understanding the big fundamental and technical of trading. So we don't really just put a trade and then risking more than what we're actually getting rewarded for. So we will look at the multiple of different things in the video that you guys will see here, which also we will have a multiple of series that will follow. You can definitely take actually a look at our trade, understand what we're doing, and then if you feel that it's something that you feel comfortable doing it as well, you can actually take our trade as a signal and do it yourself, but that's at your own risk. We're just showing you what we would do, where we put our money as well, and it's completely up to you what you do from there, okay, for educational purposes. So we'll start with future analysis, okay? I have here on this screen here other charts that we are charting, and we will also do recap on some of the trades that we took over the last couple of days, okay? So we will start with gold, okay? Let's analyze gold and see what we get here. So as usual, you guys probably saw in some of the other videos, what we do, we focus on firstly high time frames. So we look at the picture as a whole and we try to see what we have first. Is it an uptrend? Is it downtrend? Is it a consolidating side trend? Or what exactly we are having? Okay, so now we see that we have on a higher time frame, we have this trend here. Okay, so this is on a monthly. And then we want to go and see what we get here. So we want the last low pivot, and then we might need to change that. Okay, so this is not good because we have those two on the way, which in theory we can put a channel, but it's not very good for us. So what we can do maybe it's actually do something along the lines of that, which is not very healthy right now. So trend line from the bottom, not something that I really like. So let's go to weekly and see what we have on a weekly time frame. On a weekly, I have something here. If we put here, we will have multiple of hits on a daily. We would have, so that might be a better type of a trend line. Okay, let's go back to weekly, see what we got here. Okay, no bad, not bad. Then we want to take our 50% Fibonacci from the top to the last hit on our trend line to the bottom. Let's see what we are seeing here with that. There is some respected activity in the 50% Fibonacci, so we can then confirm that we leave our trend lines and 50% Fibonacci. After we have this confirmation, what we want to do, we have our journal that we keep a journal. Now I also got a journal that is more online based, so I can have pictures. That's for trade. For different confirmations, I have my journal that I wrote by hand. Okay, so basically what we need to look at will be multiple of stuff. So we need number one, we'll need to start with key levels. So key levels is basically historical support and resistance, okay, over the long time frame. Okay, let's see here. So how we get that again, I believe you guys remember. It's basically, looking at the high and low pivots of what we do. So also, what we want to do first, we will want to have all-time highs, which is actually right here. So we need to mark all-time high. Okay. So this way, when we get to that area, it tend to act as resistance, support and resistance. So you can see right here how it came, to the all-time high, short, got a long squeeze and short out everybody. So that's a very, very important indication. The same thing here. You can see it's went to all-time high, got a bit higher, but then came lower right after because the bears want to defend that area. Okay, so now that we have that, what we want to do, we want to basically go for those key levels. So we have one key level area here, more or less. Also, what you are able to do is to make sure that we're finding the right key level area. Okay, it's also will show you based on volume. Okay, so let's an example. You go from here to here, from the high to the low. Okay. Now what we want to do, we want to put that on right on the candle. Okay. Not sure why that's doing that, but maybe it's okay. 67, 68 as well. So we can see that in this area, right? Like here, lower volume in this price range is being traded. And in this area to this area, we have way higher volume. Okay, so we can understand that this area will be respected. But then what we need to do, we need to get I need to figure out, because it shouldn't do that. It should be an entire area. So maybe because it's on a daily, no. I will figure out what's happening with the settings and I will show you guys after. But how it should be that we actually should be able to see at what price range we are having the most trades volume wise in an area. Okay, so it is a very important thing to understand, to make sure that as a result we know where we can actually trade. Okay, so what you can do also, you can send that to the back. Okay, send that to the back, develop. Okay, so like this, it's not on top of the candles, it's behind the candles. You can do that. And in this area, okay, in between those areas, let me actually see that, and we want to do 68, 68. So in between this area to that area, which in this area we have the most volume traded, okay, so we know that this area is being respected. So when it will come to an area of that, okay, that tells us that the market thinks it's a very high area of value, okay. So we want to really figure out if we have some type of position in this area, which we will in a moment. Here shows us that it was lower volume of participants that came in to actually buy to increase the area going higher, or no. So yeah, increase the volume to go higher. There was more volume to go lower, and as a result, we can see that it start to go down, and here they start to try to increase the volume, but then it start to go down. Very nice. So now what we will do, we will start looking for our key levels. Okay, so our key levels. Let's see where is our key levels. So we have one here at 50% Fibonacci. We will not really need to mark that because it's already marked. Okay, there is one right here that we are seeing, but it's more like a range type. So from here to here, more or less. Okay, why? Because you can see here. Okay, so I will just stretch that like that, so we can see a larger thing here. And basically you can see how in this area, right, we have multiple of hits of the high before of a massive drop to the bottom. Okay, and what's important to keep in mind, okay, that in this area we have a little bit of a like an area of a gap that we can see that it was respected but went a bit higher before it went lower. So it's important to understand that you don't want to have your stop loss right next to it. You want to make sure that you give it a bit of a room for correction, so you don't get squeezed out and then it goes into your favor. Very important. Okay, now as you can understand also, it's on a weekly, so it might take you a couple of days before it gets corrected. But even if you look now, I'm not recommending to have a very wide stop loss like that, okay, because number one, we are not sure that we will have enough funds for such a big move and multiple of trades. Okay, but even if we do, understand something, it still would work for you from a risk to reward standpoint of seeing that you would be risking roughly, let's say, $90 to make $300, rounding it up from both ends. But it will take multiple of days, and it's a very, very large move. It's 4% and basically almost 14%. So it's very large moves. It's not that I'm recommending of something like that, but I'm just saying that you can have room for corrections. And then you need to look, maybe here it's, let's say, 4% before it gets corrected. What about here? That's basically have a lot higher. However, what you can see, so here it's 5%, 5.5%, okay, and then it's 3%, 2.5%, then it's 1.5%, and then it's like 0.7%. Okay, so you can see the ladder, how it went downwards from such a area, which tells you, you know what, on the second time retest, you can already enter somewhere here, put the stop loss here, and you can see that this trade would work phenomenally. Okay. Now, of course, all of this is hindsight. So, you know, it's you. All you need to understand is the clues of how the market works, and then you can just figure out how you will work that yourself. Okay, that's something that you need to figure out. So we have that. We have this one key level here. The other key levels, you know, it's not something that I'm interested to look for, especially in such a video that I don't want to focus only on key levels. I'm focusing on creating a plan for a trade. So what is the goal here? Now that we found this one key area, we're going to look for supply and demand of a high level, okay? High probability of working out. So we have this one, great. However, location is not bad. No structure, no structure, but there is the size, but there is no continuation. So no good, no good, good, okay. So this is all-time highs. All we have is basically this trend line for next time as a test to be rejected. So there is already two confirmations there. Okay, now we're going for 12 hours. This gap up, actually, hold on, Baji. Okay, so good, we didn't shout too much. We will have to recorrect everything. Because as I mentioned on one of my videos, and I will mention it now again, this BADJ, it's very important to understand that it is only for indices like ES, the SPY, the NASDAQ, you know, like VIX, and other ones that are basically like YM, RTY, the Russell, you know, those five basically. Anything else, you don't need this BADJ, okay? So you want to make sure that you're paying attention to that, because as you see, I did my drawing up to here, and now all of a sudden I recognize that, and what that does for me is making sure that I need to draw it again, and you can see the massive difference. Okay, so what we will do from my end, we will delete everything and we will start again. Now, I wouldn't recommend to get like, oh, pissed off, upset and whatnot. It is what it is. You know, opposite, I should be happier about that in a sense. Okay, you know what, now it will come out even better. Okay. Interesting. So you can see that this trend line on a monthly basis, it is getting respected because the candle on a monthly time frame doesn't close above. However, it is very crazy because, you know, depends on your stop loss category, but it would be stepping out somewhere here. Okay. We have a great monthly right here, monthly zone. It's very far, but it's very good. So I will mark that. Template, we have monthly, and we want to buy. Okay, very good zone, because there is like good location, good structure, and somewhat of a continuation. So it depends. We might have different one here. It is pretty far, and will change multiple of times contracts. So I'm not really for it. Also, on a monthly base, you can see actually how this was a very, very respected type of a trend. I mean, support and resistance right here, very much. So it's very good as an additional confirmation. Okay. What I will do? Oh. So in this area, we have a great, it's like $20 though. So it's $20 of correction. So that's quite a bit, but there might be, that it touch that, go up, and then will come back down. So it's all of a level of probabilities. Are we going to take that? Not saying that we will, but we will definitely be looking. What I'm trying to see if we have another type of support trend line that will be of better respect to that, because we cannot really way too high. Way too much. What's important here is precision, right? Like the correct way that you put it. It's super crucial. And you want to find a trend line that is being respected, that it is working out. In this area, I don't really see a trend line, so I will not mark, because I don't want just to mark something to have it. This played out very well. Low of Friday played out very well. Uh, Very good, like $60. Wow. Okay. That's like monthly. Daily. Do we have anything daily here? See, we have 1 point something. So you can see balanced. Okay, so basically right here, you can see how this is like balanced. And then imbalance, it's when we're basically having the area that we're getting out from. Okay, and that's why it's so important to understand balance versus imbalance. So this is basically balance, also known as consolidation. The moment it's exiting either from here, okay, so you will see it's exiting the high of the balance, okay, or it might go from the bottom too. Then it's coming into the imbalance zone, and that's where you want to make sure that you are capitalizing on. And patience will be key in that, okay, because that's basically how it's going to work. It's going from one area where the market thinks that it's fair market value at the moment to all of a sudden thinking, you know what, now it's not fair anymore. Like this indice or this metal, it's not worth 2078 an ounce. It's worth more. So what they say, okay, we've been in this balanced area for a bit. Let's look for a new area that the market will think that is fair. So they start to push the market up, okay? And now that the market came to this area, okay, it's saying, okay, we think that this is the right place. And they start to go again into a balance zone, up and down, up and down, up and down. And then once they think, okay, that in this area, the market been fair, we sold quite a bit of metal, gold, okay, then they say, you know what, let's go to a different type of price range, and it might go either from the up, will make new high prices, or from the bottom, and then what happened, it will go into another balanced area. It might be in this area, because we have here support and resistance, I mean supply and demand area, or it will go below that and will break as if it's not there even. Okay, very important to understand that concept. When I started to trade, I heard about that. I didn't understand much, but not long ago, I actually literally saw very simple explanation as what I explained to you right now. That I hope it's came across very simple and very clear. So when you are looking at trades, and when you are seeing balanced area, you know when you can take a trade. It's very important to understand. Okay, so, okay, let me see. Moment here. Okay, so now we want to continue with another zone. Let's see if we have another zone, 12 hours. So, no. I mean, you can see that there is this zone of 12 hours, can be good because there is also continuation, very nice. But we don't want all of a sudden, to come to such an area and have a lower probability. Okay, so good location, fairly large in comparison, the baseline, the base candle in comparison to the 12 hours. So let's see what we have in the 6 hours. We have very much better. Okay, so you can see it's 0.15 to 1.7. Very, very good. So we will take that and we will highlight that as 6 hours. Now, We continue. Doesn't mean that we don't continue to look for this area, because we might see a better structure in the 4 hours, which in a way we do. It starts earlier, okay, but you can see the wick is on the top. Here, the wick is on the bottom. So it is important, okay? And when I'm saying the wick, okay, it's, I will point this out. You can see this is on the 6 hours, it's on the bottom, okay? And what we want to do whenever we actually make a zone of supply and demand, we want to make sure that we do from the low of the body to the highest wick of the other candle that we're looking to, make the supply and demand. Okay, so it's very important. So here, what happened? We have from here to here, but this little wick, you can see it's on the bottom. We prefer to have it on the top. Okay, so look here. What happened? We have the wick on the top. We're going from the bottom of the zone to the higher of the wick. Okay, I know we need to put it to saturate, but we want to have a better probability because it might go to this high of the wick. Okay, so that's what we want to do. So we want to go from here to here. We have a, larger area that we are risking, but we will have also a great reward that we will look for. Okay, and overall it's very good. Location, structure, you can see continuation of the sell-off. Location, structure, and size. We have all three very well. Okay, very well. So we have that. So I just want to find the 50% Fibonacci. So here, to here. So we can see, let's see. This is well respected too. So I will leave that because then we want to see a short from here to a 50% Fibonacci, which works very well. I will have another video of a recap that I will show one of my trades, how I took a long position, was holding it until it comes to the 50% Fibonacci. I didn't exit at the 50% Fibonacci because I thought it might go higher as well, break through it for a retest, as you can see here, right? It will do something like this, then come lower, and then it will break above. So this type of area I would want to do, but doesn't work all the time. So I took profits and protect my position. So it doesn't all of a sudden happen that we'll go from here, test the 50% and go back, and from a green trade you become a red trade or a break-even trade, and it's very unfortunate. Okay, so now we'll continue. This is very good zone here. We'd want something of that. We'll have here also from here to here we have a great zone of, support and resistance. Again, you see balanced break under. Okay, let's see, 3 hours we don't have here. Now we don't necessarily want to look for many more zones within an area that is not necessary. Okay, we actually have another zone here, but that's in the middle of a move down. So, and look at the wick, not our ideal. Okay. So look, there is also 690, which is great to see on a higher time frames. Um, you know, the supply and demand, it's very, very good. So it's very important to see. Okay. But the wick, as you can see, it's on the lower side. Okay. Very big body. Okay, even though this closed very well and that here, and now it has the continuation, and now it might go for an additional correction. Okay, so let's see. So there is, I already have three confirmations on this one, which will be lower, higher low. Okay, so we have a higher, lower. Okay, so we would want to see something here again. Okay. We have the 50% on the top of the 50% Fibonacci, and we have the 4 hours supply zone. Okay. Oh, sorry, demand zone. Now we can also see here we have 2400. We have here also another one which is support and resistance. No, not here. We have it right here. We have it right here. Okay, we have that as support and resistance, but also, actually, I will move it up a bit, and I will show you. We have a 24 whole number, which is very important psychological number. Okay, very important psychological number. So we have that. Then let's see what else we got here. Okay, we have here another demand zone, but it's not a big deal. Okay, perfect. So what we are looking at, and by the way, as I showed you this higher low, it's on a high time frame. So that's important to understand. Also, let's look what we are seeing. We are seeing an uptrend, okay? Uptrend overall, okay? Very long uptrend. So it's important to understand that and make sure that we know that. So a probability of short might be short-lived. Okay, probability of short might be short-lived, and we are looking for a short. So it's important to understand that this short need to be very well thought out to make sure that we protect our profits. So we will talk about that. Okay. We will talk about how we do that. By the way, also very important to mention that on this channel, we talk about futures analysis, technical analysis, and other type of elements. It's more for advanced traders because as you see, we don't have much of indicators. We don't have much of anything on the chart, but we do our own analysis. Okay. We will be using, let's say, the moving averages, which is the 100 and 200. We also have the 20 and the 50, which we will be using as well. Okay. However, we mainly use the 100 and 200 for the sake of confirmation if we have a short or okay, phenomenal. So basically, as we said, we are looking at the daily moving averages as additional confirmations. Okay, so what we potentially will be looking at, it's looking at something of such sort that it's either will be rejected of one of the moving averages, which we of course can backtest them as well. So let's say here you can see it was very much respected on the 100-day moving averages. Also, as an additional confirmation why we can look at a long, because if historically we're looking every time the 100 moving averages will go from the bottom to the top of the 200, it would have a move higher. So here, okay, the 100, okay, moved to the top from the bottom of the 200. It's got tested and it's zoomed higher like crazy. So it's a very, very, very important thing to understand. Look at this. It's had a move higher of 22%, 22.5%, and had pretty much a move higher by almost 10% without a correction. Crazy in my eyes. And of course, you know, it has to be understandable that in trading, you cannot have, you know, like a thought of only like, okay, how long this trade will take? Is it 1 day, 20 minutes, 5 minutes? Yes, some trades will be couple of minutes, couple of seconds even, okay? But then some other trades will be, look at this, it's over from, let's say, February 15, 14, 15 to April. So 2 months before it start to have correction going downwards. Okay, 2 months you could have hold that. Most people wouldn't hold that for 2 months. But how you can do it? You can do it in such a way that you put few, you know, lots here. And when I say few, 5, 10, and then you can, you know, take profit of a few and continue some others, you know, to just continue taking profit. So we will talk about that in other videos. And as I was wanting to mention, you know, it's important that on this channel we speak about futures, technical analysis, psychology, and all of that. But if you guys want us to make any videos that have to do with, you know, with interactive brokers, how to use it, with trading view, how to use trading view more precise, how to create an account, you know, what each indicator that we use means, how we test it, back testing it, all of those stuff, let us know, because we don't want to create videos that will not be of high quality and high, you know, to basically fulfill your expectation. For us, it's important to provide value, high value. That's the word I was looking for. We want to make sure that we provide high value for you, so you really enjoy watching, learn every time, and really capitalize on what we are doing here. Okay, so let us know what you think, and let us know which direction you want us to take those videos. More educational on the beginning side, or more of what we already do, create plans with you, and really grow together. Okay, so now that we understand that, we have this, and more or less I can look for a short from here towards the 100 moving averages. Okay, so let's see something. So what I will be looking at, it's, I will move that. What I will be looking at, it's something of such sort. Firstly, I will need to understand one thing. I will need to see so I want to figure out what is the tick on mini gold. It's basically $10 per tick, and if we don't settle, we basically get a physical delivery. So it's very important. As you guys remember, we spoke about that. It's on schwab.com futures slash future markets. Okay, so that's where we're looking. So we understand that. Okay. Now, if it's not mini micros, right? It's going to be minis, and on minis, mini gold, we basically will be receiving also a gold bar, but it's $100, okay, for every tick. It's $10 a tick, $100 a point. Okay, so what we want to do, we will be looking to take a micro lot, okay. It's $10, and our risk parameters at the moment it's $100 per trade. We want to make sure that we have $100 per trade. Okay. So because of that, we have to figure out. This will be a bit more challenging to do $100 per a trade on such, because here the zone is basically like $20, almost $20 on the zone, for us to be able to capitalize on half of it. So what we can do, and I wanted the 2 lots, at least 2 lots. However, what we can do, we can figure out how we can capitalize on that with 1 lot. Well, you see, basically, what I'm seeing here, we have three lots. I mean, 3 conformations at the minimum. We actually have more than that. We have one, the psychology number, which also is support and resistance. So there is 2. We have this one as a great zone with great structure, location, and size. We have a higher low. So that's already 4. And basically, for sure, we have more confirmations coming with that. It will be with the other indice, which is with gold. With gold, we will have also the other confirmation that we're on the low of the 50, on the high of the 50%. We can trade short, okay, and we are above the 100 moving averages, so we can trade towards the 2. Okay, so it's very good. However, there is one which is basically us having an uptrend overall. Okay, so it's important that we take profits sooner than later. Now, because we have 1 lot, it's a bit more challenging. Now, why we want to have a stop loss of such that it's within our risk parameters? Because if we, let's an example, say, you know what, we'll do $400 for the risk right here. So we have now 4 lots. Now, what happened if we lose $400 on this one trade, and on average we make profits on the other trades, $400? Then what we will find that are all of the other profits that we made from other trades that we have 1 to 3, 1 to 2.5 risk reward will be swiped out within that one trade. So that's why it's important to make sure that we have at least a month of great profits within the $100. Then we can move to 150, 200. Okay, very, very important to understand that. So here, what I will do, I have that, okay, I will put here alert, okay, And basically, once it's come closer to this zone, to this area, then I will start looking for the position that I want to take. In theory, okay, it looks like a very good plan. It's just how to manage my risk with the $100. That's what I will need to figure out. Okay, so that will be for this gold mini, analysis. For sure, we'll do a second part once it comes closer to that, and I will post that. I will have a link that I will attach to it, and we'll go from there. I also will do other trade recaps on some of the trades that we actually did do analysis like that, the way they worked. Some of them worked great, some of them worked not for our favor based on our analysis. Okay, but overall, uh, we have a great trade that we take. And here, that's one of them, as I showed you, the 50% Fibonacci. I had this one here and literally touched that and bounced back, as I mentioned, and now might break above. But again, we never know the probabilities until we don't see it. So we have that. We have this one that worked out very well for us based on that trade, and have a great history behind that trade. On this trade, you can see also how it's very balanced, okay, within the trade. And yeah, we'll speak about the other important trade that we took and the profits we saw, and what we are experiencing so far overall with our trades. So we'll keep you updated. We'll show you some of the trade recaps, and we'll go from there. Thank you for watching, and we will see you in the next one. Thank you.